Welcome back to another episode of the Climb Finance Show. Stocks were up today due to the actions, or shall I say the inactions, of the Federal Reserve following the FOMC meeting today. Thanks for joining the Climb. This is your host, Kian Lynch. So first things first, as I mentioned, stocks were up today. It was a monumental day, in my opinion. It's just an absolutely monumental day. First, I'm going to show us a chart of the S&P 500. Then I'm going to get into two articles about what the Fed did or did not do today. And then we'll talk about why they didn't do anything. And lastly, we'll take a look at the future. So let us move forward here. So looking at the chart of the S&P 500 today, it was up about 1%, nothing crazy, but we got to dive into this. So it was up, then it was down. About 2 o'clock, it started seeing some volatility. And then at 3 o'clock, we saw a huge jump. At 2 o'clock is when the Federal Reserve released the announcement that they are going to leave interest rates unchanged at 5.5%. And then at 3 o'clock, Federal Reserve Chairman Powell gave his speech, his press conference, talking about their decision making and why they left rates unchanged. So this is a nice CNBC article by Jeff Cox, who basically is talking about the Fed held rates steady unanimously. All members of the Fed agreed to hold it at 5.25 to 5.5%, where it's been since July. Second consecutive meeting without a rate hike. This is the second consecutive meeting the Fed chose to hold following a string of 11 rate hikes, including 4 in 2023. Stocks rallied on the news. Fed Chair Powell said, getting inflation at 2% has a long way to go. And he says that they're not even considering or discussing a rate reduction at this time, but I don't really believe them. They cited some data that the economy has moderated, even though it's at a solid pace. GDP was up 5% annualized, but I saw it was actually, that number was cut down since then to 2.1, I believe. If you look at this chart here, it details all of the rate hikes since 2022. And you can see it has severely moderated, actually come to a halt. And I want to switch over quickly to this article. Wall Street Journal, Fed extends rate hikes but keeps door open to moving higher. So if we scroll down here, I really like this one comment here. It sounds like this is a Fed that really doesn't want to hike again. Mike Cabana, head of U.S. rate strategy at Bank of America, said if they wanted to hike again this year, Powell would have pointed to more to the risk that consumer spending would undo progress we've seen on inflation. So you might be asking, like, why would they not want to raise rates? You know, they're trying to get inflation under control. They haven't been able to. What is going on? Moving over to why they might not want to raise rates, here is an article by Yoon Lee talking about famous investor, especially bond investor Jeffrey Gundlach, saying interest rates are going to fall as a recession arrives early 2024. Gundlach believes rates are about to trend lower as the economy deteriorates. Even though Powell says he's not considering a rate cut, Gundlach says rates are going to fall due to a recession. Pointed out a few signs of an economic slowdown. Firstly, the unemployment rate, which is low, is trending higher. The spread between the 2-year and 10-year treasury yields is still inverted for more than a year. And lastly, we're seeing a wave of layoffs, specifically in finance and technology. He believes the effects of that are going to spread. So let's take a look at the market and what the market believes. Interest rate probabilities. This is the CME group. Basically tells you what the market is thinking. I look at this often. If you look here for the next meeting, 77% of holding rates at the current rate, 5.2 to 5.5. If you look at January, again, most likely 5.2, 5.5. Fast forward to May, and the market is expecting a higher chance of a rate cut than a rate increase. So Powell and the Fed are doing their best to be hawkish and say rate hikes are still on the table, but the market doesn't believe it. I don't think Powell even believes it. He just doesn't want to come out and say it in case inflation spikes back up again. But best believe it, with the US Treasury rate issuing so much debt to try to control, the amount of astronomical debt we have and the potential wave of layoffs and recession, I don't see any rate hikes coming in the near future, which means it could be a bullish time for asset prices and just drags everything down. That's it for today's episode. Thanks very much for joining.